Well, welcome back to the balance of this. We left off with income from operations of 186,239 is where we left off at. And what we're going to be doing here is new information. And the new information starts with discontinued operations. Now, discontinued operations means you're getting now that line of business. And to have a discontinued operations, you have to be able to keep the revenues and expenses of that business separate from the rest of the operations. And it's also not just simply doing away with the product line, but you're actually getting rid of or getting out of that line entirely. Okay. So with that, we have two levels we have to have. We have the income or the loss from the operations that we may have, and we have to keep track of the gain or loss from the actual sale of the business segment. So this is discontinued operations, and then this is also going to be reported net of taxes because we've already calculated our taxes up here. So when we do this net of taxes, we'll show you how that works. So what we'll have here, we have the loss from income of business segment. Now we're going to assume a $30,000 loss, and remember we're in the 30% bracket. So we take 30,000, which is where we're assuming our loss is going to be, times 30%, and I'll put that right here so you can see it. So we take the 30,000 times the 30%, and that gives us our $9,000. That's our tax savings because that will reduce your taxes by that amount. So the loss that we'll report will be $21,000. That's our share of the loss. And then we're going to have a gain on the actual sale of the item. Gain on sale discontinued business segment. And again, it's a 30% tax bracket. So this time we're going to assume that we had a, $12,000 gain on the sale. So we would take the 12,000 times the 30% like we did before, and that's where the 3,600 came from. We would then take the 12,000 minus the 3,600, and that would give us a gain of 8,400. These are the two simply netted out. So it's minus 21,000 plus the 84, which gives us a minus 12,600. We then take the 186,239 that we had from above, add the minus 12,600 to it, and we end up with a net income then of $173,639. Now we have a new section we have to add, which is earnings per share. This is required for all income statements, which we haven't been doing before. So we have income from continuing operations. We have income from continuing operations. And for that one, we would take our net income, or income from continuing operations, which is the 186,239, divided by the number of shares that we have outstanding, which we're going to assume that's given to us in this case of $10,000. Then we would have our discontinued operations. And we do the same thing. Take the net, which was the minus 12,600, divided by the $10,000, and that gives us a minus $1.26. And then we would take the net income, and we would do the same thing with that one. The 173 divided by the 10,000, and that gives us 17.364 as our earnings per share. Okay, so anytime you have multiple sections, you have to have the three things you have to have. If you don't have discontinued operations, then all you would have would be the net income from for basic earnings per share. This is called basic earnings per share. Intermediate 2, you'll get into the other earnings per share. So that's the end of this income statement. So we have the income statement. You had your revenues, cost of goods sold section, operating expenses, you had selling and general administrative expenses, and then we had other revenues and gains, and then we had other expenses and losses. We netted those two out, and we end up with income from continuing operations. That's what you're in business for. Subtract off your taxes, and that would give us the income from continuing operations. You then have discontinued operations. Remember, that's for when you actually get out of the business, and that is reported net of taxes. So on this one, we're assuming a loss from income of $30,000, and we have a gain of $12,000. That's why the loss is a tax savings. The gain is a net of taxes, and you report them. Basically, you don't report the full amount on either one of them because you don't absorb the whole gain because it reduces your taxes by $9,000. So you have a $21,000 loss. This one, the $12,000 is reduced by the taxes of $3,600, so you report $8,400 for a total in this case of a minus $12,600. And then you have to do earnings per share, and you do the number of shares outstanding. Now you really have to do a weighted average number of shares, but I think that comes later. That should do it for the income statement. Hopefully that helps you, and we'll probably do another one for the statement of cash flows. Okay, see you later.